Okay, so we will be backtesting January of 2023. This is going to be the first backtesting call, so if you were to watch every future recording, this is going to be recorded for everybody that is just coming into the call. If you miss a certain part or you want to rewatch a certain thing that we go over, you will be more than welcome to. It will be found in the video lectures channel. So we're going to start out, we're going to go to AM. This is 6 o'clock. All right, so we have Tuesday at 8 a.m. right here. So starting out, we go on to the higher time frame. What are we going to be looking for? With this current structure, 4 hour looks, I would say, pretty bullish. Bullish up until this high. Why am I saying that it's bullish? Well, take a look at this. We have a bearish PD array. A PD array is a fair value gap. If you look at this, you will see that, here, 1 second. You will see that this got disrespected. We inversed this fair value gap. We pulled back into it. We held it. And then we got follow through even higher. If you take a look on the 1 hour, we are, well, this is extremely bullish. However, now we did get this 1 hour inversion back to the downside. This could be really bad if the S&P 500 took out this high. All right, so what am I going to do? I'm going to go over to here, S&P 500. I'm assuming that this is that high, and the 3 a.m. high Tuesday, 3 a.m. Tuesday the 27th, 3 a.m. Tuesday the 27th. Yes, so we do have an SMT here between these highs and these highs right here. You can see that price went higher than this original point on the S&P. However, on the NASDAQ, price did not. So I would be bearish here. Longer time frame picture, it looked really bullish. It still does look bullish, but I am going to be bearish here because we do have unfilled fair value gaps. So we do have targets to target for shorts. All right, I'm going down onto the 5 minute, and it is still 8 o'clock, so we are going to let this play out at exactly 8 o'clock. It's very rare that we will be taking a setup, but we are going to play it out and see what happens. We did inverse this. We could be coming up to here. This ordered block potentially. We're going to see. I don't think that we're going to trade pre-market on these backtesting streams so that we can have the legitimate results for New York AM, but I will be going over pre-market for the sake of you guys learning the model and what we look for in pre-market. So right there, we got an inversion. I would be looking for price to come up to this high at least after taking out this leg. Of course, there is a possibility that it could go even lower and it needs more liquidity before going even higher. But ultimately right now, I'm waiting until it's going to be 9:30. You can see the time in the bottom right. So price did push up after taking out this high. We are now coming down to take out this low. This is interesting. If this was an SMT, this could have been a pretty good trade to take for us in pre-market. Nope, there was no SMT. If, let's say, in this case, the NASDAQ took out that high, let's say it came up a bit higher, and then we got that inversion, that would be a really good setup that we would take throughout the day. However, that is not what happened, so, well, we wouldn't have been able to take the trade. But right now, we're just going to skip until 9:30 so that we can then see what we would play, and we can further confirm our bias. When we get closer to 9 o'clock, I want everybody to understand this. When we get closer, when we are in this time period, from 9 until 9:30, this time period, we are not trading. We are not placing buys. We are not placing sells. We are not doing anything. All right? All we are is we're just waiting. We're looking at the trend. We're confirming that the trend is right. if you're in a really good entry from before in pre-market and you're up, I highly recommend that you go break even. If you're up and let's say you're in longs from all the way down here off of like this inversion, right? Of course, go break even. Maybe, just maybe it will run up to these highs. You never know. Okay? And that is why you go break even. But do not look to buy here, because if you buy here, look at that. It can realistically go any way here. But if you're in already all the way at the bottom, you're already up mad money. All right? And your risk isn't as much, because worst case, oh, you move your stop up, you get stopped out in profit. Okay? So we're going to wait until 9:30 here, and we are going to take a trade. Well, we will look at the bias before the market does open here. Boom. So market opened. If we take a look, we go 15-minute. Man, I'm going to be bearish. This does not look good. We did inverse this whole 15-minute fair value gap, but we do have that SMT. We did pull back up. This could be a retracement on the fib if you use that. I'm not a big user of it. You won't catch me using it. I will never tell you, yes, I got this because I use the fib. I'm not really like that, but you could use the fib there, and you'll see that 0.618 did get hit. That is the golden pocket, and I would be looking to take a short. So right now I'm just waiting for an inversion to happen. I'm looking for a bullish fair value gap to get inversed. This is a little bit way too early, and also this gap is a little bit too small. My rule of thumb is that if you have to zoom in to see the gap, it is not a good gap. All right? So I'm waiting, and we do actually come out to take out these highs. But because we did that, now this is a liquidity sweep. So let me see if ES actually took out those highs. You can see ES didn't. Now we have a double SMT. So originally we had that SMT, but now we have this SMT. Because NQ took out that high, but ES did not. So if we are looking on the NQ, I'm basically looking for any gap to get inversed here. Okay, this is brutal. This is exactly what I wanted to see, but it's so low. Look at that. Wow, he would have top ticked. Ugh, goodness. So we're going back to the NAS. We did inverse pretty much everything. If we were to fib this out, if I wanted to enter, I would place a limit anywhere like here, realistically. We do have this gap. I could potentially try taking a limit out of here, because this is very unlikely to hold, because the amount of sellers that we got on this candle is insane. We took out all of this progress that we've had for 3 minutes beforehand. So what I'm going to do, I'll place a short at the fair value gap with a stop at the high, and take profits at the lows, I guess. We will target that low. And I will place a limit order. I just don't want it to be a market order. Sometimes it does that. Here it is. Limit. Save. Okay, fire. Here we go. We have a limit order set. We're taking this because we have an SMT. We had NASDAQ sweep the high. So that makes the trade way better, because it was actually NQ that took the liquidity as opposed to NQ being the lagging index. So NQ, SMT, inversion. We have our limit set. We are going to wait for an entry. Oh my God. That's crazy. We might have just missed that. This is going to be the moment when it drops right here, because we reacted. We inversed this whole leg. Honestly, if you looked at the higher time frame, 3 minute, it was right there. You have this fair value gap, and it rejected this fair value gap. It's selling off. This is really good, but shit, we missed it. All right, I'm going to cancel that. But this should play out. This should drop down. Yeah, wow. Okay, that's good. That's good. It's fine if you miss setups like this because you understand what was going to happen. We know exactly why the market tanked. We can see exactly where our entry would have been. We just clicked through it. But it's okay. Let's see if we get another setup today. We're just dropping down. We don't really have a long. We are just sort of going to liquidity. Your TP would have hit originally, which is the crazy part. If you were to even enter off of there targeting that low did in fact get hit. So our next point of interest is going to be even lower than that. Let's see what happens. I don't know. This is a little bit too extended. We're too low. You're shorting into liquidity. It could easily bounce off of any moment here. If you take a look at the 5, you'll see that there's a 5-minute unfilled right above. If you look at the 15, well, there's a 15-minute unfilled above that. So price can definitely move up into these areas before it can go down even lower. So let's see what happens here. Right here, price technically does inverse, and you can, I don't know if I would personally try this. I guess you can say you have low resistance liquidity right here. You have the 5 unfilled. You've got the 15 unfilled above that. If this was an SMT, this trade would be way better. But, I don't know, without the SMT, it doesn't look that good. It can still play out. It's just not one of my highest rated setups. That's crazy. It did not play out. It just edged the 5-minute. Wow. And the 15, because that turned into a 15 unfilled right there. Okay. So, overall, first day, our bias was right. We were bearish. How did we get that? I hope everybody here understands. Of course, I will go back and read over the questions that you guys have. Make sure that you comment them so that you don't forget them. But to summarize it, for the first day, we had a bearish SMT. Then we had an internal SMT that formed with NQ and ES, where NQ took out this high and ES did not. And that is what caused us to drop. That is the first day. Well, technically the second day, but it's Tuesday. We're going to go over to the next day. So now it is Wednesday at 8 o'clock. Yes, Wednesday at 8 o'clock. And the first thing that we're going to start out by doing is go into the high time frame. We're going to figure out the bias. So I'm going to clear all of this. My bias still for this, because we came down and because we took out this low, I could look to see us be bullish here. We do have a 4-hour unfilled at the bottom, but I do believe price will go even higher now. I am going to mark out this high, and I am going to mark out this 4-hour unfilled right there. If I look at the daily, there is a daily unfilled fair value gap that is all the way up there at 384, but I don't know if we would get there right now. But over the long run, I think that price can most definitely go there. Let me just double check on the higher time frame and see if we have an SMT, because if ES took out these lows, then it's obvious buys. ES did not take out the lows. It is not obvious buys, but let's see what happens here. I am going to skip through pre-market here. Pre-market is its own thing. Hello. All right, there's no skipping through it. Very clean. SMT into inversion. Yeah, wow, very good. SMT into inversion. Inverse happened right there. Then when this whole leg got inversed, price continued even higher. And, well, no, it didn't take out that high technically yet. If it SMT there, then it's never going to take out that high. See, we got another SMT right there. So SMTs are everywhere. SMTs will help you out a lot. Make sure that you guys utilize them because they can really perfect your entry. They can be what changes your whole trading. Okay, we're at 8:55. We're going to go to 9:30. $9.22. Okay, what happened here? We have no SMT. We're gonna wait a bit. All right, price sold off. The first thing I'm gonna check to see is if there's any SMT right here because I'm going to know if price is going to bounce here and just go straight back up, or if price is going to continue even lower. I'm going to go S&P. Wow. Okay. It took out this low, but the ES did not yet. There is a chance that this could then SMT, but it's not yet confirmed. Technically, it did bounce, and it did go up to make a new New York AM high, and then it came down to make another New York AM low. What is this? This is so whack. I just completely ruined my chart. Alright, I'm going to have to delete volume. Ugh, this is so weird. Okay, we're just playing it through here. We had news. Note, we do have a data wick, or a data low right there. So remember what we talked about when we mentioned data highs and data lows. Price is going to be drawn to them. Okay? Bang. Data low got taken. It was not going to go up here. Instead, this is more of a turtle soup. Takes out liquidity. Pushes down to data low. Now it took out data low. Now you can look for a long. Of course, if price just keeps going down, there is no long for you. But we'll see. There is no inversion here. There is, if anything, there is a bearish inversion. Yes, data low and data highs are the highs and lows of news candles. Typically 10 o'clock, 9:45, and 8:30. So let's see. Price inversed these bullish fair value gaps back down. Let's see if we make the leg lower. I would be more favored for longs here just because we are going to have a 15-minute unfilled right there. Watch this. 1, 2, 3. Okay. 15-minute, we have a 15-minute unfilled fair value gap right there. This is going to be a draw on liquidity for us. Okay, so right there we just inverse this to the downside. This is not a short that I would take. I would not short this. Even though this is an inversion, I would not short. Why? Well, we have resting liquidity right above. We have the draw on liquidity. The draw on liquidity is higher. Why would you short when there is a 15-minute unfilled right above you? Why would you long when there is a 5-minute unfilled below you? Right? It doesn't make sense. You have to wait for price to get there before you can even take the trade. So why would you short right there? Makes no sense. Right? You literally just got cooked. This is actually a really good long setup. I'm going to place a... I could place a buy right here. Because low-key I would have entered there. I would still be NF of this candle. Yeah, I guess I could do this. This is a trade that I will take. Market order, why are we taking this? Well, yes. All right. So, number one, we have a lower time frame SMT. You can see that this bullish inversion here failed. Why? Well, it was because the draw was lower. you can see that we inverse this. If you were to go long here and your stop loss was to be at the bottom here, well, you just unfortunately would have gotten stopped out and you would have been liquidity. Well, what happened after we took out that low, we created an SMT. You could see that ES never took out those lows. It was only NQ. After it did that, it then inversed this 1 minute that we've got right here. This is our entry. Bang. You could even put your limit order at the bottom here. That's actually what I'll do. I'll put a limit order at the bottom. Maybe I get filled for some micros even lower, because usually price will retrace back into the actual inversion itself. Okay, I did not in fact get, well, price did come back into the inversion. I was just a little bit too low and I did not get filled. That's unfortunate, but you can see that if we were to drag this out across the full way, you'll see that you would have bottom ticked that entry by just placing your entry at the actual fair value gap that was inversed. Now we are in a long, and the long is paying. Yeah, I'd move my stop loss to break even here. Let's see what it does. I am up $1,000. I am risking $500. This is a place where I would look to either move my stop loss up into profit or take half off. If I take half off, my trade is essentially risk-free, or I could full close right here. But remember, if your drawn liquidity is right, it won't matter. It won't matter where you close your position, because the market is always going to be drawn to a magnet, okay? I'll take a partial here off for the sake of the video. I do have to show you guys proper risk management, and this is what you should do when you are trading. So we are going to take off half. Yes, it might suck because you're like, wow, I could have made so much more money at the end, but realistically, if your trade goes break even, you would have lost that trade. So I would rather take $568 than a potential zero. I don't know about you, but if I'm risking 500, I will take 600. Now we are just letting the rest ride, and we're going to see how it plays out. You can see price delivers straight back up to the highs. And this is our entry model right here. Again, summary of the trade. We had a liquidity sweep. We had a high time frame SMT. Then on the lower time frame, you drop down. We had an initial inversion that failed. Then we had a lower time frame SMT. And after the lower time frame SMT, then there was another inversion off of which we did enter, pulled back into the inversion spot. We could have, this is where the limit should have been. It is what it is. But pulled back into the limit spot, and then price continued to rally up. Now we're going to go to, well, the next day. Bro, okay, I have to manually go through it because apparently FX replay costs money. Okay, this is 9 o'clock. If we come right here, yes, this is 9 o'clock. We are going to skip over to 9:30. Boom, we have 9:30 market open. First thing we do, check out the bias. What do we think? I think it looks horrible, in my opinion. Looks like it can really fall here. It has room to fall way lower. All right. But that means that when it falls all the way down here, you will be able to then hopefully take a long, a mechanical long, if anything. So I'm going over here onto the 1 minute. Let's see if we get some sort of setup going. Of course, if I was on a trading view chart, I would have my equal highs. I would have actual targets. I don't know if I would, I I don't know if I'd be long all the way up to there, but we'll see. Mm. 1 minute inversion right there to the upside. Honestly, this looks interesting. Let's see if there's an SMT. There is no SMT. Again, when I say I'm checking for the SMT, I'm just seeing if they both took out the low, or if maybe one of them made a higher low instead of a lower low, because that makes your trade 10 times better. We do have targets. We do have a lot of targets. Let's see how this will play out. The reason for taking this trade is, well, we took out liquidity. Right here, we took out these previous day lows. All of this. We have a 1 minute inversion. We have we're also in a 5 minute, but the structure looks very clean on the 1 minute. That's why I'm taking this setup. We also have a 15 minute right above. So these are going to be my two main take profits / break evens. First take profit / break even hit. Risk to reward here doesn't really make sense. You could go break even like that. Oh my gosh. All right, boys. Well, that was an interesting trade. What could we have done differently? I mean, our idea was right. It did exactly what we thought it was going to do. What could we have done differently? Actually, taken a partial here, taken a partial here. Honestly, TP here wasn't bad because it was a 15-minute unfilled. You could have targeted 930 open high, but after going break even here, you did get spared the first time. Then it was a 1008 candle. It's just a random candle. Price did move up a little bit higher, and then ultimately price continues to go lower. It's not a bad setup. It's a great trade. We definitely had an idea of what was going to happen, and we could predict it beforehand. But just take notes on how you would improve your execution, where you would put your take profits. Yeah, even if you were to just full target that high, it is still a 2R setup. We're going to go on to, well, the next day. Nah, it wouldn't have played out. 8:39. Okay. Goodness. Damn, this is a really good setup right here. These longs. 1 minute inversion, stop at the low, target data high, bang, target data high got hit. Again, this is the setup. We're going to enter at the fair value gap, stop at the low, take profit at data high. Why is this data high? Well, it's the high of a news candle. Okay? There's that. Guess now we could play it. See what happens. 921. Boom. Market open. 1 minute inversion, rally to the upside. I would continue to be bullish here. Well, I'm still bullish on the day. I'm still going to take a long here. This would honestly be the low. It could bounce off of this order block. This is the low of day. Wow. Okay, wait. You could low-key take this. Is it worth it, though? I don't know. We'll try it. 1 minute inversion after bouncing off of the order block with a stop at the bottom. targeting the high. There was news at 10. Fuck, dude. This is a really good setup to add into. This is a really good spot to add into. Wow. Because we took out this low. Oh. We have an SMT. Because we took out this low. We have another inversion I would low-key add right here. What are my targets? All the way up there. I'm going to hit place order, save. Let's see what happens. We are still in a long position from all the way down there. First take profit smacked on the long from before. We're still in the long from right now. These are two separate entries that you could have taken. Let's see. Okay, I'm up 1R. Because I'm up 1R, I'll move my stop to break even. Just because this is how much I'm risking. Yeah, we'll hit play. Damn, I'd love to see that high get taken. Okay, fire. There it goes. Literally perfect read. All you need to know are SMTs. Realistically, that's how we were able to catch most of these moves. I think all of these trades, well, most of them for sure, required an SMT. They worked because there was an SMT. People in the chat, you guys can correct me if I'm wrong. But, I don't know, no SMT here, SMT here, SMT here, SMT here. But, yeah. I'm going to go over to the next day because we're going to head over to, when we make it over to the start of the day on Tuesday, that's when I'm going to hop off and we're going to have Raza. Raza, you can actually get onto the stage and you can start getting prepared. You could just sit on mute. But when we get to the start of Tuesday, that is when Raza will be handed the mic and he will be teaching you guys psychology. Also, everybody in the call, I will let you guys know when I keep track of everybody that is in the call. All right. And after that, then you're free to leave. All you have to do is wait another, I don't know, 5-10 minutes, and we're going to be done with the backtesting session. Okay. We are going to go to 30-minute here, and we're just going to click right through, and you can see, wow, we could have held. We could have held. It is what it is. All right, what's cracking here? All right, we got 9:30 open here. Let's see, my bias here obviously going to be bullish. Why is it bullish? Well, we've only been going up since the moment that we entered all the way at the bottom here. So that is why I will continue to be bullish. I'm going to have to wait for some sort of liquidity sweep to the downside before I can then take a long to the upside. So let's take a look. I don't know if I would be taking a short here. I don't know. I don't like when the market moves like this because it's very unpredictable. I mean, it is predictable. It's just very hard for you to get a good risk to reward trading the Judas swing. So we're still waiting. No setup. Market's just pumping. Markets are still pumping. This is unfortunate. I hope we can get a setup. 10-12. 10-15. Oh, shit. What is this? We've got a 5-minute unfilled right there. I guess you can take this short, but, like, you're gonna be break even off the rip. This is your take profit. This is where you would instantly just full close and then bang. Trade is over. Like, you win. Right there. And now we have an inversion. I don't know. This is equal lows. Even I can tell that this is equal lows. If I didn't have this marked out, I wouldn't see that these are equal lows. I will need to wait. Boom. Just like that. You see, that's why you don't take no longs with equal highs, equal lows below. There are cases when you can, but most of the time you'll get cooked. It's a very specific setup. So if you take a look at this, now we drop down. Okay, now we have a fair value gap to enter off of. We need to inverse now this leg. If we can close above this leg, now I would look to take a long. Why? Well, we tapped into a 15-minute fair value gap, a 5-minute fair value gap. We're sweeping 2 sets of equal lows. It's also an SMT. I don't know what else do you need, but there is your inversion. Stop at the low. I would go break even at this high, just because this is all low resistance liquidity that's going to get taken. We're going to be targeting even higher. I'll target just 100 points here. Low key. Just 100 points. We'll go market in. I will take a partial at this first high, though. Okay. Actually, I will not take a partial at that first high. There's no way that this is only... Oh my god, it's because I'm risking only like $300. I'm risking 0.5%. Oh, I got you. Okay, yeah, I'll take off half. I didn't realize that my sizing was less because I changed it from before. I was wondering why I was up and down so little money. It's okay. The concept remains the same. Okay, if we hit 500 again, I'll take off another half here. And I'll trail my stop even higher. Just play it. Oh, I got stopped. And my take profit would have never gotten hit. Okay. Still, valid setup. Exactly what we wanted to happen happened. We got a sweep of liquidity. We had another SMT. Guys, I'm telling you, listen to me when I tell you, SMTs are the key. Look at what price does when there is an SMT. Every single time we have been right. We have not had a single loss. You can rewatch this recording, and you can hear me read over the price action. Again and again and again, and hopefully you will understand it. There will be way more videos that are backtesting streams that are recorded, and if you guys want to rewatch this video will be available for you to see in video lectures.